RBL Bank reported strong set of numbers for the March quarter. The net interest income surged almost 47%, while the profits went up by 38%. The asset quality, however, remained stable on sequential basis. Vishwanath Nair had a chat with the MD and CEO of the company, Mr. Vishwavir Ahuja. Listen in.
Very happy to note that our key pillars of growth, which are the micro banking business, our card business, even to some extent our LAP business on the retail lending side, and on the wholesale side, are increasing importance and relevance in the large corporate space. All of that contributed handsomely in this quarter and positions us extremely well to be confident of this type of growth even going forward.
Sure. So you mentioned, credit cards and LAP as some of the growth areas. Now we saw about 55-60% worth growth year on year on both these portfolios. What is the strategy? I mean, LAP was something that a lot of lenders had not really pushed for because there's an inherent risk in the product. Similarly, on the unsecured portfolio, there's also a risk there. So is unsecured going to be your doorway into more retail?
Look, firstly, we have emphasized before also that the way we do LAP is different from the way most of the industry does LAP. For us, these are business loans where there is a strong cash flow stream, existing against which we are lending, and the collateral security is like an embellishment, So structurally, our LAP structures are different and make it much safer. For that, we sacrifice a bit of margin. I mean, we do take lower margin, in our LAP business than some of the other industry players. But the fact is our portfolio is so much more safer. Our gross NPAs in that segment are 0.7, 0.8%. So therefore, it's a different LAP business. Now, what has happened is that while this business has steadily grown, we were not growing it so rapidly previously. But somehow in the last few months, as there has been, some supply shortage, if I may say, the number of providers also became a little tight, let me put it that way. I think we have seen, a bit of that grow nicely for us. So that's on the one side. The card business and the micro banking business are, our key growth drivers, as I just said a little earlier and before. On the macro banking side, we've seen one event risk happen post demonetization. But I think the fundamentals of this business are so strong that we have a strategic, position in this business. We are the leading players in the country. We continue to see traction. We are ready for future event risks, And if you measure this business over a 5-10 year period, the returns are very good. On the card side, we've built a very credible franchise. We do it again through partnerships. We have one very significant partnership, and we have other smaller partnerships. And again, in terms of our business model, it's a little more de-risked business model when it comes to customer acquisition and the way we do our card business. So, and that helps us maintain high growth rates at the same time maintain, prudential levels in that business. So these really help us. And on the large corporate side, we are now very credible. We are very much more market accepted. We have full range of products, and we have now scale. As opposed to being a small bank, we are definitely on the upper end of being a mid-sized bank, which is well capitalized. So our ability to play with scale and greater relevance in that space. So that gives confidence to the bank to grow across the board on a much more sure footing, on a much more sustainable basis. Right. So, risk management, managing asset quality goes hand in hand with the growth in the bank. And we have demonstrated that time and again. And it all is in the way we do business. I mean, it's the what of the business is important, but the how of how you do the business is more important from a sustainability perspective.
Recently, there was an RBI paper regarding people and their behavior when it comes to deposits. Now, the understanding is that CASA is becoming less and less attractive because some of the other investment and savings products are offering higher interest rates to people. Are you seeing some of that movement within the bank? And if so, what is happening on the CASA front for RBL?
Our CASA percentage on a fast-growing balance sheet, has actually increased or improved quarter on quarter, year on year. And we have touched 25% now. We expect that for various reasons, our CASA percentage will continue to grow. Yeah, and we will see more and more of that happen in the way we run our liability strategy. And there are many legs to that, strategy. So while what you're pointing out as an industry phenomenon is true, but I think the way we see opportunity, we feel that there is sufficient traction for us to continue to grow our CASA over time. And to get into some, we are expanding our network of branches and our support infrastructure, associated with franchise building. We have been a little under par there, at 320 branches or so. I think 500-600 branches in the important financial clusters of the country is very important. And we have seen the benefit of that. So today we have the resources to continue to invest. There's enough internally generated earnings now to be able to invest behind, a faster pace of growth in network. So that's one. Our rate strategy, differentiated rate strategy, continues to help us. And the way we cross-sell across segments, that also, helps us in terms of improvement in our float business and CASA business. And there are some other legs to this strategy. So the point being that we are very confident that CASA will improve over time for us.
This differentiated rate strategy, since it's worked so far, are you planning to continue with that?
Certainly, yes. Into the foreseeable future, yes. We may narrow the gap, if I may put it that way. Now that as we penetrate more and more, we may narrow the differential. But yes, we will maintain a difference.
Okay. Just to get a sense of, this was something that the regulator started to do with respect to benchmarking, external benchmarking of lending rates. Now, of course, it has deferred it since. But what is your view on external benchmarking? Are you looking at that as a possibility to benchmark your lending rates?
See, we have stayed away from this as a bank. We also expected that there will be more debate and discussion around this subject before, there is, if I may say, some consensus around whether or not and how it should be done. Right. So we believe that where we are at right now is working, and perhaps that should continue.
So MCLR for now.
Yes.